The CTKS method is all about growing you from fear into confidence to be able to let you profit in any market condition. To go from fear into confidence, it's important to have a signal-based focus, not a noise-based focus. There's plenty of stories out there, but price reality is the only reality that exists if you want to profit. Typically, people only look at charts they put money into, and then they just take a very small portion of price and say that's somehow important. Actually, we need to look at structure, understanding that all charts are intercorrelated and interconnected. Therefore, we need to understand the market pulse. And one of the best ways to do this is through the cheat sheet, which is available free of charge on ctksmethod.org. Okay, let's have a look at the markets. If you're trading and investing in the crypto space, it's vitally important to look at Bitcoin's price, and especially the structural levels of resistance and support. To find a structural level, you can't just mark up a couple of days. You have to mark up all of them. Bitcoin's gravity is the thing that you realistically need to know the most about. You can see how Bitcoin is moving in this pattern. This pattern is that blue line. The blue line is Bitcoin, and here it's overlaid on Ethereum. We saw as Bitcoin started to weaken, it pulled Ethereum in that direction. No alt can escape Bitcoin's gravity. We saw the same thing with Binance Coin. The same thing with Solana. Notice how Bitcoin went up here. What happened there? What happened with the other alts? Some of the alts did really quite well. Look at XRP. It just exploded upwards. What about Doge? It came up. Cardano, ADA, it came up. Litecoin came up. But what about when Bitcoin fell? We saw a big fall in Ethereum, a big fall in Solana, in BNB, in XRP, in Doge, in ADA, and also in Litecoin. This is really important to understand. Bitcoin structural levels control the fate of the alts. Typically, I zoom in to see where price is doing a cut over, in other words, a change of trend. And what we can see here, this is Bitcoin on a daily basis. We have analyzed through level 1 and level 2 standard certification in excess of 5,200 days to come up with these particular bands. Now, what are these bands called? They're called SZs. What does that stand for? It's called a Stanfield zone. And what do we see right now, right here? We can see that Bitcoin is trying to get through a structural resistance level. If it manages to get above 68,000, it's a pretty good call that it will make its way up to 78. But from 78 to 84 is a huge amount of structural overhead resistance. A lot of people would have thought that the previous all-time high created just price discovery. This is not correct. You will literally find that price discovery is misinterpreted by the vast majority of people. There is always levels of structural resistance overhead. It just depends how strong they are. If we start to break the all-time high, so many stories are going to come out. Don't forget, the stories are in the before section. You just want to look at price reality. Knowing your structure is vitally important. You literally don't want to be crowd following. You want to be independent, just focusing on signals. And the key with everything inside financial markets, price reality is the only reality. Consistent profitability is only attained when you understand chart intercorrelations and chart interdependencies. Total crypto market cap has a structure inside it, and this structure especially plays out on the alts. You will find often that total crypto market cap and Bitcoin can be the deciding factor if your charts go higher or lower, but everything depends on CTKS structure. I refer to it as CTKS structure because it's drawn over all periods with 2 levels of standard certification to create the strongest buy and sell signals available inside the crypto market. Okay, let's pop on the indicator. We can see currently total crypto market cap as it is at $2.31 trillion. We've got overhead structural resistance at 2.328 trillion. We're coming up to there at the moment. Now, what have we seen just recently? we've got a bit of a confirmed structural support level. If we start to come back and just do something like this, we could take out that 2.328 trillion. But if we do something like this and underside retest the $2.304 trillion area, we're on our way back to the 2.281 trillion. And this particular chart pattern, you might notice it just spreading across all of the different alts, just like Bitcoin's. Understanding how to apply chart intercorrelations and chart interdependencies, as well as CTKS structure, because you're literally looking for the structural levels across a wide variety of interdependent charts. Now, why are you doing that? Because before the method, people were just looking at the chart that they put money into. They weren't looking at structural levels, even though some people claimed that they were. They were literally recent indicative price levels, or RIP levels. And RIP is weak statistically. That means it's not a good signal. For example, if you could just drive with 1% visibility through your windscreen when you're driving a car, that's not the best. You need to have the full windscreen, and you need to know what the other cars on the road are doing. You can't just blindly change lanes if there is another car there. These are like all the other cars on the road, all the other charts. It's an ecosystem. Let's practically apply this. Let's just consider where Bitcoin's structural resistance and support levels and total structural resistance support levels play out on a chart that you might be putting money into that's not Bitcoin. If you're a long-time viewer, you know Bitcoin's gravity is something I talk about a lot. This candlestick pattern behind all of these top alts is Bitcoin. When price comes down in Bitcoin, we can see that the alts are going down with it. And this is literally all the top alts. There are so many under here. But what happens when Bitcoin goes up? It pulls all the alts up with it. Bitcoin pulls the alts down and pushes them up as well. This is a 30-minute chart. We can see currently over the past 24 hours, Pith is out in front, followed by True and Aave. Stacks is not doing too badly, and leading up the bottom of the pack is LDO, Arbitrum, and Ethereum. Let's actually apply the knowledge we've picked up so far to Solana. We can see Solana's current price is 173.30. But we need to be able to look to the right, so we need to know what the structural levels are. Let's do so. By understanding where structural support and resistance levels are, what Solana is doing is making a lot more sense to us. You can see the structural levels here, and a very big one through here. Let's just put some values on these lines. Rewinding in time, we can see this 182.57 structural level of resistance. Solana just couldn't get past it. It tried to consolidate around that 179.54, and this will be a level that we can look at going forward, but it just failed. It failed here, it failed there, it failed there. And you can see how structural support at that 173.35 caught Solana's price, rebounded it, but it was this one that really did the job, 170 and 12. A lot of people, when they're just getting into structural analysis like this, they think it's a brick wall. The price can't go any further. You can never get a tail, and you can never get a body of a candle below a structural resistance or structural support level. It's not the case. These areas are gravitational. You do get overshoot all the time, because if this one is not holding, it's seeking to get to the one below. But if this does hold, and we've got a confirmed breakout here at the 170 and 12 mark, we're waiting for a confirmation on 173 and 35. But how do we match this and marry this up with Bitcoin and total crypto market cap? I'll show you how. We'll need to learn the immediate structural levels on Bitcoin. So let's do so. I'll just put some right or forward leading indicator values on these lines for you. We can see over the past couple of days that this 63.992 structural support level has held particularly well. We cut through that 65.097 level here and found structural support, and we retested here and failed but made a higher low. This means that the buyers are piling into Bitcoin. They're saying, oh, I got a bargain, I'm in. and then we just cut through that. This is quite common to see this kind of behavior. You may get a reconsolidation just under a mass of structural resistance lines as well. So we have a confirmed particular support line here, a structural support line, and we're trying to confirm that 66,118 level. This is not confirmed as structural, well, it's kind of confirmed as structural resistance at the moment, 66,448, because we spiked up, but it's too early to tell. It's just in a natural pullback. One of the things to just be aware of, price is always moving down and then up, down and then up, between structural support and resistance levels. And you'll note I'm doing all of this on a live chart. We don't have pre-canned analysis here. We do it all live. Okay, how does this relate to Solana? We know that Bitcoin has come up through multiple structural resistance levels and is showing a degree of strength. This is going to translate into upward price momentum with Solana. For example, if Bitcoin gets above its own structural resistance level, it shows that Solana can have the strength to go to 179.54. But if Bitcoin starts to pull back to its own structural support, we would expect Solana to fall from 173.35 down to 170.12. Consolidate, hopefully make a higher low and get through this if bullish momentum is there. If the bears start to come back inside the market, it's going to be hard for Solana to break down below this 170.12. It's a really strong level. You'll notice that some levels are lighter, some levels are heavier, and some levels are clustered. Heavier and more together, more clustered means stronger, and we want to find stronger structural support levels. It's also vitally important to look at total crypto market cap. And when we look at total, we can see that it's coming up into structural overhead resistance at that $2.328 trillion mark. If it gets up to there, it could flatline for a while because this is fairly heavy and we're in the middle of a gap with light structural support. So it could favor a return at least to create a higher low around that $2.303 trillion mark. Or if we invalidate that, going back to the 2.227 trillion. If that's the case, we may see Solana fall back to its stronger support levels. Solana's price fate is directly tied to if Bitcoin can make it above 66,448, and of course, what happens with total crypto market cap. But Bitcoin is the first one that you want to look at. Total will give you some degree of confirmation. So far, it's looking relatively constructive, but just bear in mind, this has been a really big move up for Bitcoin. If we get a retracement down to that 66,118, that's not bad at all, so long as we keep on making higher lows as we go. To move from fear into confidence and to profit in any market condition, it's very important that you don't create stories for yourself. Don't do story-based analysis. Instead, look into the concept that price is always moving in a wave. And in Level 2 Standard Certification, we actually formalize that. If you just need a refresher, please go into Level 2 Standard Certification to get that. To move into confidence from fear involves knowing how price actually operates. It's always moving in a curvilinear fashion, especially inside the crypto market. It's wild. As it goes up in a bull market phase or a positive trend, it can really get away from that particular trend line. So that's something to know. And also in a down wave, it does exactly the same thing. Things can be moving either up or down, and it doesn't matter. You can buy long at spot and still do incredibly well if you know what you're doing. So that means you have to have your own rules. Having rules is vitally important. Unfortunately, so many people don't have any rules at all, except FOMO in and FUD out, which is basically buy on green and sell on red. The markets went quite green the other day. And I was just warning people that that's probably just a FOMO call, and the markets they've retraced quite substantially. Which brings us to a really important thing. Learning from your losses is vital. Create rules for yourself that just embody what losses have taught you. And the thing is, don't get emotional or angry or blame or get upset. If you make a loss, nobody has gained from your loss. There are millions and millions of people out there and millions of bots. You've got all sorts of things that are trading 24/7 in the crypto market. The retail mindset, the scarcity mindset, the fear-driven mindset, which is the before mindset, is all about your loss is somebody else's gain. And by definition, your gain is somebody else's loss. Afterwards, when we move into confidence and profiting in any market condition, we understand a thing called positive excellence. It's all about a win-win. If you know what you are doing, you win. And if you don't, you learn a loss. And if you learn a loss, you can get a new rule. And you pay for those rules, so you better get it, or the same rule will be taught to you at ever increasing cost. Therefore, you can think of the market not as a hostile place, but a really loving and kind place that says, hey, I'm going to give you a lesson. I'm going to give you a loss that's got a lesson wrapped inside it. But if you get this lesson right, you are going to party financially. The market wants you to succeed, but it will not give low knowledge people a leg up in the market. Actually, if you think about it, I don't really know realistically where this happens. Can you become a doctor looking at YouTube videos on how to do surgery? No, you can't. Can you play golf by just learning and watching YouTube videos on how to swing a club? No, you can't. Can you become a pro tennis player by just watching a video? No, you can't. You've got to actually do the thing that you want to get into. Taking that tennis analogy a little bit further, if you want to become a pro tennis player, but you're afraid of hitting the ball, well, that's not so good either. And do you cost your opponent a game if you win? No, you were simply better than your opponent. And is it an opponent at all? Some of the greatest tennis players have always said, I just go on the court and I play my game. I don't even worry about the other person. Having an abundance mindset means that even if you're playing tennis, you're doing your best. You don't give the game to the other person just because you're nice. You just look at it and say, play your best, I'll play my best. If I make a loss, I'll just learn what I did wrong and do it better next time. Let's do another practical run through looking at Ethereum. I'll just pop on the indicator, I'll just pop on the levels. These were the levels that we looked through in yesterday's video. Now, what happened at 33.45, we saw that it didn't even come into that structural resistance. That meant that the sellers were too strong. We saw that 32.96 level getting sliced. And when you get enough momentum behind something, you need a lot of structure to catch the price. And that's actually where we caught it at 31.38. It's been trying to reverse off that. You can see that Ethereum has been quite weak relative to Bitcoin and total crypto market cap. But still, structure is absolutely everything. You can see that these values are rightward looking. You want to see where the structure is inside the market. And of course, if you're doing your intercorrelation and interdependence analysis, you know how Bitcoin and total are actually weighing down on Ethereum's price structure as well. As we're at this point now, I'll just move over those labels so we can see what's happening with structure as we look to the right, because these levels, these SLs called Stanfield levels or CTKS levels, are forward-leading indicators of price. If you would like these indicators, they're available from ctksmethod.org. These are the indicators that I use for my own personal trading, so you're seeing what I see. Profiting in any market is possible if you buy on red and sell on green at spot going long. It does require a different way of thinking, but you can just say, forget about it bull market, forget about it bear market, I'm in the eagle market, the borsog market. You can profit in any market condition and convert fear into confidence, but you have to move away from the before and into the after kind of behaviors. It's not too hard to do if you know where you're going. If you would like the structural levels on any of these particular charts, the indicators are available from ctksmethod.org. Have a great one ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.